Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the January 17th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Now, think about that one, folks. Think about that, especially when it comes to trading and investing. If you become a prisoner of your past, you've got a losing trade, something went wrong, whatever it might be, ooh, that'll keep you in jail. Instead, be a pioneer of your future. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary day and an extraordinary extended weekend out here. Stevie loves those. With Martin Luther King's birthday on Monday, the U.S. markets will be closed, but we'll be back at them on Taco and Terrific Tuesday. But for Fantastic Friday, folks, what I want you to do is always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what these bulls and bears, what these buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, well, we've got you covered there. You can send me an email, steve@tfnn.com. Please, in that subject heading, put radio show question. Of course, in our Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we got the indices a bit mixed out here. You got the transports and the Russell that are trading a little bit lower. The Dow's up 33 points. The S&P 7, the NASDAQ 100 up 14 points. Nothing significant percentage-wise. The semis, on the other hand, are up $10. That is about 0.5% to the upside. You've got gold up $9. Silver's up 13 pennies. Light sweet crude is up 20 cents. Natural gas back 7 pennies. No bottom there. You got the 30-year Treasury down 20 ticks, leading the charge to the upside. You've got Google up $14. Aberdeen Standard Physical something or other is up 5% or $11. Sherwin-Williams painting the town green. That's up $8 and change. And Chipotle up 7. Leading the markets to the downside. MGP Ingredients. MGP Ingredients. I don't know. They don't seem to have the right ingredients. Off 26% or $13. Amazon down $12. Tesla off 8, CDW Corp down 7, JB Hunt Transportation off 6. Of course, I want to look at what you want to look at. And the first request that came in earlier today, coming in from Art. Art wants to know, can we take a look at the CMCSA and see what the charts are communicating to us? So if we take a look at that, is Comcast. And as we take a look at the first Art, where price is trading daily, weekly, monthly in relationship to its profiles. Recognize the top of the profiles are the red horizontal lines. That is supposedly where sellers would be, and support would be the bottom line in this set of profiles. These 3 lines, oftentimes 3 lines out there, and that would be the green lines out there, and the cyan colored are your center. Well, here's what we know about Comcast: above the daily, above the weekly, and above the monthly. So now what we got to do is go take a look at what each of the individual charts are telling us. And so if we take a look at the daily time frame chart, we've got an A to B equals CD pattern. You can see that. It looks like this. You're going to start down here, looks like on the trading day of December the 11th, make a run up to this high out here on January 2nd, a little bit of a pullback for a few days. And what you can see here, Art, now this is a gap to the upside. That's a strong way to complete the 1-to-1 A to B equals CD. Today is going to be bar number 8 of a TD setup 9 count. Remember, tops can form on bars 8, 9, or 10. Don't have to, but they can, or bottoms. In this case here, the A to B equals CD pattern is suggesting it's going to make a run for its 1 to 1.272 expansion. Really, a couple things are suggesting that. First, a shallow retracement, about a 35% retracement, that C to D or that B to C leg out there. So that would be the first thing. So, picture it like this, Art, on the A to B equals CD pattern. Take a rubber band. I want you to picture taking a rubber band and wrapping it as tight as you can around your index finger, until it totally blocks off all the blood flow out there. And then I want you to back that off only 35%. And then I want you to let it go. And what I want you to do comparatively is do that exact same exercise, but I want you to back it off 62%, a 0.618 retracement. Which of those two has more power, has more energy? Obviously, the one that we only backed off 35%. If it's got more energy, that means it has more energy, and a good solid reason why it would do more than a one-to-one A to B equals CD pattern. Our second reason is if you take a look at price right now, it's on the left-hand side of that C to D leg. We're using the exact same angle as A to B, and we are in C to D, and being on the left side says you're on the strong side of this move, which would suggest moving to higher price. That doesn't mean we won't see a top on Tuesday, Wednesday, something along those lines, it's some type of retracement back into at least Stevie's green line around the 45.97 area. Now, that's what the daily time frame chart shows us. How about the weekly? The weekly chart, because I think you're entertaining a long position out here. So you're going to do the reward risk, and you can take a look at what we just did on that daily chart. The weekly chart, you happen to be in appears to be wave number 6. That's letter F on my screen. And price is moving higher, doing less relative energy. Nice big wide-ranging bar out here. You just have to be concerned if a bearish reversal candle were to form. Well, that would be a intermediate term change in trend. Not there just yet. And this can be resolved by price continuing to move higher and getting its gusto, meaning relative strength. Now, if we take a look at the monthly time frame chart out here, what we can see is prices moving higher, either in wave number 7, letter G, or wave number 5, letter E. And on the monthly chart, doing much like many of the indices, not all, but many of the indices, price moving higher, doing with less relative energy. Only a problem if a bearish reversal candle forms, and then we see it close below Stevie's green line, currently at 44.86. So what this would say is this could be nearing the end of the run, and maybe not such a good time to get into the equity. Wave 7 can extend out here, no bearish reversal candle, but it just seems like Comcast is very much like the market conditions if we were to go take a look at the S&P or the Dow or what have you. So now, that can lead us into, hey, so what are the markets doing, right? Because if we get the market correct out here, well, then maybe some of these topping signals that we're taking a look at are no big deal. And that is a possibility, isn't it? It's got to be a possibility. Well, how are we going to determine if that's really a possibility, Steve-O? Don't just leave me hanging out there. Don't just, bait me, right? You don't want me to do that. Of course not. So we were just taking a look at A to B equals CD patterns, right? So there's a good place to start. And the better place to start, or a place to start, might be taking a look at the big picture. The big picture for the big four. The big four out here are the Dow in the upper left, the S&P in the upper right, the NASDAQ in the lower left, and the Russell 2000 in the lower right. And here what you've got are the A to B equals CD patterns that are in play. These are quarterly time frame charts out here. And what you'll see in the Dow, you might remember this. Remember Steve-O saying, hey, the Dow is going to make its way up to 30,480? The A to B equals CD on a quarterly basis off the 2009 bottom is 30,483. And that's only the one-to-one. If what we just looked at in Comcast and understand its A to B equals CD patterns, look what it suggests here. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 36, S&P 8 points, NASDAQ up 18. Would love to hear from you, 877-927-6648, or send me an email, steve@tfnn.com. As we were going into that break, we were taking a look at the bigger picture, really taking a look at the A to B equals CD pattern, which really helps us to project price out here. And so let me just expand each of these. Now, this is a quarterly time frame, so it allows you and I to get rid of a lot of the noise out here. And the B2C leg out here, we take a look at the Dow coming off of, on a quarterly basis, off of the 2009 bottom out here, really just a very small retracement that we have seen out here. I mean, just a small retracement. Nonetheless, this gives us a one-to-one price projection of 34.83. Now, I want you to picture in your mind the old Stevie rubber band method of the A to B equals CD pattern, wrapping that thing around your finger and only backing it off. Now, I don't show the retracement here, but I can tell you it's less than a 0.382 retracement, and you back that off, and what do we have here? You've got a big move to the upside, at least to complete the now this does not show the one-to-one area. I don't know why it doesn't. Oh, switch to charts. That would be good. Geez, sorry about that. So that's interesting. Why doesn't this have the one-to-one level out here? Stevie was making some changes earlier, and what did I do to possibly fib level number one? Oh, I see what I did. That's a bummer. There we go. So now you can see the one-to-one area, which was 27,251. Prices above that says you should head to the next area. That's going to be 34.83, and the likelihood is over the long haul, 34,594, 39, 133. That's what the Dow. And the question becomes to us as we take a look at these charts out here is, 34.83 is totally game out here with regard to at least its price projection. If we take a look at the S&P, let's also take a look and add back the one-to-one level out here. So now we've got that, and you can see that on the S&P 500, prices exceeded that one-to-one. That was 32.78. This suggests that the S&P 500, longer term, quarterly basis, headed to 36.77 out there. No top. If we go take a look at the NDX 100, let's also, you can see it's past the 1 to 1.272, but let's just correct this properly, show you where the 1-to-1 area was, which was at 76.09. 86.21 was the 1 to 1.272. 99.09 is what the larger picture is for the A to B equals CD pattern for the NDX 100. Let's finish this off by taking a look at the Russell 2000. And the Russell 2000, again, let's get that 1-to-1 price projection in there. price that would get you to 1896. And then above that would be 2155. So if this is what's going on, and it's a possibility out here, then and prices are and the indices are just simply going to move higher because, let's face it, they have ignored a lot of topping patterns and signals that are out there. Any of those that have taken hold have, for the most part, just been just a couple day knee-jerk type reaction out there. But if prices are really transitioning to lead us to much higher prices, what I would also expect to see, something along the lines of a phase transition out there, what I also would expect to see is I would expect to see a concentration, or you would expect to see, or we would expect to see a concentration of capital into the U.S. So that takes us back. If we just take a look at the first 11 trading sessions of 2020 out here, and that's what we have up on our screen. Take a look at the rate of change. That is really column number 3 out here. And up at the, we've got the Dow priced in dollars, euros, yen, and pounds. But if we take a look at the Dow, you can see that there's no sign. If we take a look at these charts out here, there's no sign of concentration of capital into the U.S. If anything, so far, it is Australia that is leading the charge, up about 6% for the first 11 trading sessions of the year. You've got the Hang Seng doing okay, up 3%. That is above, in dollar terms, above what the S&P and what the Dow are doing. The DAX is up a couple of percent. There is no concentration of capital into the U.S. out here. Even emerging markets are up about 3% for the first 11 days. So maybe just taking a look at the first 11 days isn't really good enough. Why don't we take a look at where the Santa Claus bottom began? Okay, good idea. That would take us back to October 3rd, or at least the week that began October 3rd. That would be 15 weeks ago. Now, if we take a look at the concentration of capital since then, again, you're going to see that the Hang Seng is up about 12 or 13%. The Nikkei is up about 12%. Rate of change out here. Emerging markets about 13%. The Dow, 10. The S&P is about 13. So, in other words, no real concentration of capital into the U.S. that would signal to you and I that there's some kind of phase transition that's in place. And that says, okay, the longer-term charts, truly longer-term, that's where we head to. But what else is going on those quarterly charts? I'm glad that you asked me that. So what I did here was I went ahead and created quarterly charts for the Dow and then started to take a look at some of those other patterns that you and I like to look at. For example, you know that the markets can sing in the key of G. And if we got a quarterly basis, go all the way back to the 2009 bottom, do our Chapman wave counts, we're going to find out inside the Dow we happen to be in wave number 7. That is letter G out here. Now, price is moving higher, doing it with enough energy, so we don't see a topping signal there with regard to a Rhodes momentum indicator top. But you are in wave number 7. So that can say, okay, caution out here, maybe especially caution when there is no concentration of capital in the U.S. If we take a look at the S&P 500, well, it too happens to be in wave number 7. That's coming off of the bottom, or the low, I should say, in March of 2009. The 2007 top was formed with a TD setup 9 count and a Rhodes momentum indicator pattern for its quarterly time frame. We don't have the Rhodes momentum indicator quarterly pattern going on inside the S&P 500, but we do have that 7th wave move out here. Now, the NDX 100, likes to do its own thing. Its own thing only generates wave number 6 at this stage of the game. So it's not in line, or it's not lining up with what we see inside the S&P and the Dow, and no other topping signals on a quarterly basis that are present inside of it. So we're certainly going to want to be paying attention to the NDX 100, certainly on its daily time frame, to look for any kind of other signals that it might generate for us. Now, in the case of the Russell 2000, when it made its all-time high out here, it did it on bar number 9 of a TD setup 9 count. Amazing, isn't it? Now all these patterns, this 9 count pattern doesn't always work, but when it does exist, what you do is you pay attention to it. We saw that big move lower into December of last year. Right now, it hasn't taken out those highs, so not taking out the highs of last year does not indicate to you or I that there's a breakout that is going on. So we've got 2 toppings, really there's 3 topping signals, right? The Russell, which has already topped, and then we saw a move lower. Maybe this is a counter trend rally of some sort. I don't know. And you've got the market singing the key on a quarterly basis for the Dow and the S&P 500, and no concentration of capital. So I'm not willing to make the commitment that these larger A to B equals CD patterns that we're looking at, that the U.S. markets are right now in this phase transition, which would require a concentration of capital into the United States. It's just not there since October. It is certainly not there since January. That doesn't mean that it can't change out here. So how do we summarize this? What does all this mean? It really means we still come back to the daily time frame charts, and we watch to see how these patterns unfold. And in the case of the ES Mini, today is going to be that TD setup 9-count high, potentially. Wave number 6, that's letter F that is on my screen out here. This is Steve Rhodes with TFNN. We'll be right back. We're going to go take a look at Citibank for one of our listeners out there. Would love to hear from you too. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got a couple of questions in the queue here. Let's get to those right away. Dennis writes in, wants to take a look at Citigroup. He's got some nice gains, wants to understand where this might be headed to out here. So here's what we know about Citigroup right now. It's above its daily profile, top of it, which was 79.92. There was a brand new bearish structure profile, Dennis, that formed this week, and price is trading above that. If price can close above 80.38, it's telling you it's been able to take out resistance and should trade higher. And on a monthly time frame, price is above its monthly profile as well. So let's go take a look at this, try to get a feel, get a price projection perhaps as to where Citibank may be headed. Let's look at the weekly chart, and let's just use a smaller A to B equals CD pattern. Your A point down here I'm using as the December lows of 2018. The B point that I'm using is July of 2019's high, and then about a 3 to 4 week retracement down into August 12th. And the 1-to-1 price projection, Dennis, would get you up to 85.38. It's trading at 80.38 right now. It was only a 50% retracement out there, so this would signal to you and I that this could head up to 92.09. 92.09. That's what we see when we take a look at the weekly time frame chart for Citibank. If I look at my other charts, my apology, I've got to go with my backup system right now. These are the new tools that I'm working on. It's not entirely completed, but when I take a look at the daily time frame chart out here for Citibank, it does show that price was moving higher, is moving higher, doing less relative energy, but no bearish reversal candle yet, Dennis. So I don't see a reason. I mean, you're in wave number 7, singing the key of G. If there is a pullback out here, price could pull all the way back to 77.94, and there wouldn't be anything wrong with it. Now, I don't know where that's at in relationship to your gains out here. Again, the markets haven't generated any kind of topping signal itself. So you've got a topping pattern out here, much like the markets, but they haven't been able to bust through support. And real support on a daily basis for Citibank would be 77.94. The weekly time frame chart, what do we see out here as we switch to it? I don't see much. I don't see anything here that is setting us a caution Will Robinson sign out here. When this did top back in, looks like September of 2018 or 17 out here was a TD9 count top that it did it. That is being taken on right now. If we come back over and take a look at the monthly chart, we've got a ways to go inside the month. Volume so far looks like about, where are my commas out here? About 154 million shares, and up at the highs and prices trading just above them, it was about twice that amount. Nonetheless, if price can close above 80.70, you've got a real breakout that is going on. So I hope that really helps you out with regard to what you might want to do inside of Citigroup. Look, Dennis, here's the bottom line answer to your question. There's never anything wrong with taking a profit. If you take a profit and this moves higher by a few more dollars or so, or $10 or so, or how are you going to feel? Likewise, if it moves lower into that breakout area, how would you feel? You've got to assess your own emotions out there, and really that's kind of what it's all about. It's about emotions. But topping signal, sure. Confirmed pattern, no. Break of support, no, absolutely not. So I hope that helps you out. Thanks so much for writing in. We had a request to go take a look at Google, G-O-O-G out here. So let's go take a look at Google. The question was a price projection there for Google. So Google's gapped up today. It's above its daily, its weekly, its monthly profiles out here. Satish, let's do the same thing. Let's come back. Let's take a look at our A to B equals CD pattern. If we can find one, that makes a lot of sense. It's not one that I see. That makes a lot of sense. What makes sense to me in looking at this weekly time frame chart here, Satish, is the consolidation pattern. So let's go ahead and mark off the consolidation. A clear consolidation up at its highs, and I'd say a clear consolidation up at its lows. And that's going to be roughly, looks like about this out here. There's our consolidation. Now, the nice thing is when an instrument, any time frame, breaks through consolidation, it gives us a measured move. That measured move is going to be equal to or greater than the consolidation. So all I did was just copy and paste. Now let's actually move this thing into its where it belongs. So now we've got the measured move. And with the measured move right now, Satish, so when you break a consolidation, the price projection, that's what you asked for, was in this case here was a measured move equal to or greater than. So I don't have the greater than, but I have the equal to. And the equal to would take you into about the 1560-ish range out there. You've got Google trading at 1466 as we speak right now. So that's the price projection. That's the pattern that's out there. If we go look at its monthly monthly time frame, prices moving higher, doing less relative energy. Only a problem should we see some type of bearish reversal candle. The weekly chart, I don't show any patterns to be concerned with. On the daily time frame chart here for Google, also I don't show any patterns at this stage to be concerned with. So the price projection for Google in that 1560-ish area. I hope that helps you out. Another question coming in about OCUL. So let's go take a look at OCUL, see what that actually is. Oculus, maybe, I don't know. Ocular Therapeutics. Wow, that was a pretty good guess. And let's pull this back, take a look at where is Ocular Therapeutics trading in relationship to its profiles. Well, it's above the daily, above the weekly, and it is below the monthly. That would suggest that from a resistance standpoint, it would be the bottom of that monthly profile out there, peak, and that would be 676. Your question is buy, sell, or hold. So let's go see on my other tools out here. Let's pull those up, see what we see out here. Let's start with the, well, whatever pops up on the screen, the daily time frame. So the daily time frame makes a nice Rhodes momentum indicator bottom, wave number GD, down at the bottom out here. So I don't see a reason to sell. So you were asking buy, sell, or hold. It hasn't formed a bottom. There's no bottoming pattern. To the extent that you want to buy bottoms, we don't have a bottom in here. To the extent you want to buy momentum moves out here, well, okay, then as long as price remains above 459, Stevie's green line, no reason to not take that trade. Oops, let's go take a look at what's the weekly time frame chart here telling you and I. The weekly time frame chart, we don't see any kind of a top. Certainly we see a shooting star back here from about 4 weeks ago. So the top of that is resistance, but not a reason to sell, so to speak. This may just simply be consolidating. We talked about a consolidation for Google. We can see we had that double bottom-ish test out here. So maybe what price is going to do is make its run into that July area. That July area, let's get a crosshair out here, maybe into the 550-ish range. So that would say you certainly would hold if you are along this instrument. And when we take a look at the monthly, this did form a Rhodes momentum indicator bottom out here. So everything, so on the longer term basis, you've got a nice potential bottom forming it inside of Ocular. I don't see any reason to sell. If you want to buy, it's from a momentum standpoint. If you already hold this, then it is most certainly still a hold, at least as of 1:38 in the afternoon on January the 17th. I hope that helps you out. Ruby Tuesday wants to take a look at, you're welcome, wants to take a look at corn. So ticker symbol there is ZC, and I believe it is the March contract for corn, Ruby. That's what we'll, let's come back here. We'll take a look at, see if we can find it, where the Stevie got it. Of course, I could just type it in. That would be easier. So here we go. So I've got the March contract for corn. Well, I appreciate you, Pete. If we take a look at the weekly profiles for corn, price is trading inside a bullish structured profile. Price above the center line of that box. That was 380.4. And this would suggest, Ruby, that what corn is doing is headed up to 395. That would be the top of its weekly profile. Now, the top of its daily profile is 389.70, which, it almost got to today. So in order to get to that 395.20, you certainly are going to want to see a close above. Oh, did I go through the break? Sorry about that.
St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. So just to finish off corn for Ruby in the Tiger's Den, you know, when this did bottom way back here in September, was a nice Rhodes momentum indicator bottom. Boy, that just sent a nice run out there for several weeks. And then we saw an A to B equals CD down pattern out here. And that was then confirmed by this little gap to the upside. That was your bullish reversal candle. We then saw really prices kind of work sideways, but it was a higher low out here that had formed. And then we see a couple of other higher lows. So all of this looks bullish. But there is this struggle up towards the top of those profile levels out there. So it's bullish. I don't know which side of this that you are on. You want to see it be able to close above that let's say that 390 level out there, Ruby. So I hope that helps you out with regard to corn. What was that movie? Was it Kate Winslet? She said something like, "I'm looking for corny." Was that what she said? Was that the line? Maybe I've got that mixed up. But in any event, so much for that. Let's go to our next question here. This one coming in from Brent in Martinez, California. Brent wants to take a look at the natural gas out here. So let's go take a look at nat gas. Nat gas does not appear to have bottomed just yet. Let's go take a look at it. Let's look at it in relationship. Let's take a look at the March contract. Let's look at it in relationship to whatever profiles we can see here below the daily, below the weekly. Let me get my other set of charts here populated. Natural gas. Let's go look at the March contract here as well. Let's look at daily. Let's look at weekly. And I think, Brent, you're looking for just really any counts or anything out here. So give me a second to pull that over. And let's pull this up. So as we take a look at light sweet crude, as far as TD counts or what have you on a daily, I've got nothing out there. I've got no level of real support that is pulling back into. Let's look at a weekly time frame chart for this. Why didn't that change? Is that natural gas? No, that's not natural gas. What the heck? There we go. Is that it? Yeah. No, that still says corn. Wow. Got some system issues going on here, Brent and everybody else. Why? Oh, why? That is really strange. Huh. Okay, let me come back here in this daily. Let me see here. Yeah, we typed it in. It should have just flowed right through. And my apology, folks. These are the least of my technical difficulties, believe it or not. It's been a fun couple of days. Well, here's a monthly time frame chart. I don't know why the monthly has so price is moving lower, doing with less relative energy, but again, no reason. You need to see a bullish reversal candle on that. That's still corn. Says it's still loading. I don't know what's going on. So if we so what can I do here, Brent? My apology to try to help you out. And I got 5 minutes. Let me see if I can get this going here. New chart. Just bear with me if you would, folks, just for a minute. Let me try to get this other system here rolling. Let me punch something in. Let me make this a daily time frame out here. And if you just bear with me just for another minute. And okay, so that should set that up. And, the other thing that I can do, Brent, while I'm waiting for this thing to populate is natural gas. Don't say enough. Let me just simply go to a longer-term time frame chart, a continuous contract, try to figure out, forget about the profiles that are out here. Brent, at this stage, really, we might be looking at natural gas getting back into the 2016 low out there, which was $1.61. That's just the bigger picture. That's the, the continuous contract. So whether it's $1.61 or not would be, we'll have to come back to that. But let me try typing in natural gas on this daily time frame chart out here. And, again, from a wave count standpoint, see where we're at. You are in wave number 7. Okay, so from the high out here, the high back in November, this is in wave number 7. Now you've got to wait for wave number 7 to complete. Peak D. Yeah, I'm telling you, peak G. You gotta switch it up a little bit. You got a little variety out there. But so natural gas though does have a trough G. Maybe you got peak D and trough G. I don't know. In any event, Brent, I don't see a bottom just yet. I don't. There's no bottom signal, but it is in wave number 7 to the downside. A to B equals CD pattern that's in play out here. The one that I would draw in looks like this, so we can take a look at price projections. I would say it's either this one, which is the one we'll go with, which gives you a price move down to about the $1.87-ish type area. So the bottom line in Peak, you said the equities look like they bottomed. What equity? Just so I can punch that up on the screen and just follow through your thought for the folks inside the Tiger's Den or anybody that's listening in. Is there an equity specifically that I could take a look at? FCG, thank you. So FCG, let's punch that up on the screen out here. And let me just pull up FCG on our other time frame charts as well, just to look for some support. So FCG is First Trust Natural Gas ETF. And so when I look at this, I don't see this as a bottom per se. Price is below the bottom of its daily profile. It was 1176. It looks like it's targeting 1125. Looks like 1125 would be the nut. So that's what I see when I take a look at FCG out there, at least with regard to market profiles. I don't see anything else on my other chart. It's not updating itself. Price is 1144. So when I pull this chart over here, even though it's showing a hammer candle, it's not a hammer candle today. Today would be bar number 7 of a TD setup 9 count. So maybe in a couple of days, maybe it's Tuesday, maybe it's Wednesday, maybe it's Thursday with that TD setup 9 count. Last time we saw a low come in out here. Well, I can't say the last time, but a low that formed out here inside of this equity was back with a TD setup 9 count on November 21st. That happened to be bar number 8. So, Brent, I hope that helps you out. And sorry for the little bit of jumbling around here. Well, some of my charts aren't exactly working. It is, life is happening for me. I do know that. John writes in and wants to take a look at XLK. What's going on with XLK is the question out here. So let's go take a look at that. Is the technology sector for the S&P 500, and we can see that this is new all-time highs out here, 96.80. It's actually traded just a bit higher than that, but it's above the daily, weekly, and monthly profiles. Now, we take a look at the XLK. What it also did is negated a TD setup 9-count pattern. Yesterday would have been the high for that if that was a high. Price was also moving higher with less relative energy, but that has resolved itself today. So that's not an issue. So you're saying, hey, where is this thing headed to? And it looks like the technology sector wants to continue moving higher. Higher to where is the question? Well, really, I think you just go back and you take a look at the longer-term chart out here. You go back to the August 2015 low as your A point. That's what I would do. You would go up to your swing from October of 2018 as your B point, and your C point, December. And your 1-to-1 is 102.52, 101.272, 114.74. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks out here. So we had a request to go take a look at ticker symbol. I believe it was STT. Is that it? STT? I hope that was it. And to take a look at gold going into, so that is a State Street out here, gapping to the upside. I don't know what the question was, but maybe just to go take a look at STT. out here. So, it's above the daily, weekly, and monthly profile. So, again, that is all bullish. If we take a look at the daily time frame, price is moving higher, doing less relative energy, but a gap to the upside today. So, really not a concern. Would be a concern if we did see some type of bearish reversal candle. So, this suggests that it wants to move to higher price out here. If I switch over to the weekly, forget about the oscillator and change line. That's actually the daily. Bar number 5 on a weekly basis of a TD setup 9 count. This would suggest price could move to 101.35 out here on this ticker symbol. If we look at the monthly time frame, what do we see out here? We see that price may want to make a move up into the 103.15 area. So that's what I see when I take a look at ticker symbol STT. To close out the show, let's go take a look at Goldilocks. The question is, what is the direction? The direction, man, let's go take a look at, let's pull this up here. What is, I guess one question, Tucker, right, for you and I would be, hey, what's gold doing? What is gold doing in relationship to all of its other currencies or major currencies out there? So let's go see if Stevie can find that chart here before we get off the air, before we get kicked off the air. And so what do we got? We got gold trading higher in dollars, euros, yen, and pounds out here. So that looks pretty good. If we take a look at the horizontal trading ranges, though, it's really just camping at the weekly horizontal trading range. 1561 is the weekly horizontal trading range boundary line, and price is sitting at 1560.20. Is that really true? Is that possible? 1560.20? It most certainly is. So you're asking me for direction. All I can say, Tucker, is price is up at a resistance level right now, the weekly horizontal trading range boundary line. So I don't know which way it's going to break, up or down. I think down. Hey, folks, thanks for being here. Stay tuned. Got 2 great hours lined up for you. And don't forget, Monday's a holiday. So I'll see you on Terrific Tuesday. Have a great weekend, folks.